Welcome back, YouTube Nation. Jason Allen here, bringing you another video. Today we're going to talk more about some dividend stocks, specifically the top 7 stocks that I believe anybody could have in their portfolio. These are going to be long-term holders. Basically broke down essentially 40 stocks, and these are the top 7. Now, some people might say, well, why'd you do 7? Originally I was going to do the top 5, but these 7 companies were just at the top. They were the cream of the crop. They were the elites. These are the ones that I just thought, even in the future I could do another video of, the top 10 or the top 15 stocks. I want to do a video of the top 5 to 7 stocks that I think are the best of the best. And these ones made the cut. And to be honest with you, I was actually a little surprised with who made it to number 1 in my mind, as well as 2 or 3 of them that made the list. I just, breaking them down, dividend yields, the payout ratios, safety score, resources on what I thought would be a good way to evaluate these stocks. And, again, these are the 7 that made it. So, with that said, we'll go ahead and dive right in. And with these top 7 stocks, this is just research that I did on my own. I did use trackyourdividends.com. I would recommend looking into that. Obviously, I'll leave the link in the description below. It's not free. You do have to pay a monthly subscription. I think it's like $6 a month. You pay one time per year. Again, if you're getting into stocks, I wouldn't necessarily look into it today. But in the future, if you have a pretty decent sized portfolio and you're really starting to get into what companies you wanting to purchase or not purchase, or if you're questioning it at all, this is a really good way to evaluate stocks. This is one of the number 1 tools I use, along with Robinhood, Google Finance, even just Googling a company and then just reading information on them about where they're going with their company. So all that stuff is just helpful tools to learn by. Going to be the Procter & Gamble Company. Ticker symbol is going to be PG. They're currently selling at the time of this video $138.79. They offer a dividend yield of 2.28%. They have an annual payout of $3.16, and their payout ratio right now is currently 60.67%, which I think that's perfect. You want to see a company with a payout ratio of 60%. So that is right in line with everything that we look for. They have a consecutive dividend growth of 17 years and a safety score of 99. Again, this is just one of these companies. I expected it to make the list. It did not make, essentially in this position, the top 5, which I would probably say it's 5B. I mean, again, these 7 companies are just, they're up at the top, man. They're the elites. So coming in at number 6, we're gonna go with Target, ticker symbol TGT. Currently, at the time of this video, they're selling at $148.32. They have a smaller dividend yield of 1.83%. They have an annual payout of $2.72, but they have a payout ratio of 42.67. So that's a little bit lower payout ratio, which means I believe that they can raise that dividend in time. They do have a consecutive dividend growth 36 years. They have not cut dividends in 36 years. And they as well have a safety score of 99. So again, this is a very safe stock to purchase. Looking at any type of dividend gains, both these 2 companies, they're going to be right where you want them to be. Coming in at number 5, it's going to be Bank Oski. I don't know if I'm pronouncing that correctly. The ticker symbol is going to be OZK. For some reason, I just want to say Bank Oz. It's not an Oz. I don't know how to pronounce that. I apologize. Anyways, the stock currently is selling at $22.64. Has a dividend yield of 4.82%, which I think is pretty good. A lot of people like that 4 to 5%. I like to be a little bit higher, but 4.82% is going to be right up there. They have an annual payout of $1.09, and they have a payout ratio of 33.21%. So they have a lower payout ratio, but their dividend is already at 4.82%. So this company has a lot of room to grow their dividend, but essentially they don't necessarily need to because they're already just under 5%. They have a dividend growth of 17 years, and they have a safety score of 99 as well. Coming in at number 4 is going to be one of my favorite stocks, regardless of capital gains, dividends. It's going to be one of my favorite stocks, and that's going to be 3M Company, which is ticker symbol 3M, MMM. They're currently selling today at $168.22. They have a dividend yield of 3.5%, an annual payout of $5.88, and they have a payout ratio 62.92%. Which is, again, that is right in line with what we're looking for. We want a company that's sitting about 60%. I think anything between 55 and 65% is borderline perfect. So again, this is a great company to own for those dividends. They have consecutive dividend growth of 23 years, and they have a safety score of 99. I do own this company, so. This is one of my holders in my portfolio. Coming in at number 3, we're going to have Omnicom Group Incorporated, ticker symbol OMC. It's currently trading at $53.79, has a dividend yield of 4.83%, an annual payout of $2.60. They have a payout ratio of 42.89, which their dividend is 4.82, so it's just under 5%, and their payout ratio is under 60%. So again, this company's, their numbers are right where you want them to be. They have the potential to grow their dividend and not go over that 60% for payout. And they've got 26 years of consecutive dividend growth. So that's 26 years of not having to cut their dividends. They also have a safety score of 99. Now, I currently do not own this company. I will be looking to purchase several stocks of this company in the near future, but as of right now, I just don't own this company. Coming in at number 2 is going to be the International Business Machine Corporation. Everybody knows it as IBM, ticker symbol IBM. They're currently selling for $122.42. They have a dividend yield of 5.33%. They have an annual payout of $6.52. And they have a payout ratio of 47.58%. IBM is going to be another great company to look into. They have consecutive dividend growth of 26 years and a safety score of 99. So 5.33% for a dividend yield is going to be right at that 6% mark, just under that 6%. And then with 47% payout ratio, they've got room to improve that dividend yield and still keep it under that 60% mark. Also, IBM, they're not going anywhere. They're not going anywhere anytime soon. They're a technical company. They're going to be developing software, smartphones, I mean, you name it, space technology, whatever it is. I mean, this company's probably got their hands in all of that. So again, IBM, they're not going anywhere. Number 2 on the list. Coming in at number 1, I love this company. I do own this company. I was surprised that they made my list. I'm surprised they made it to number 1. But when I break down all the numbers on this company is just, it's an awesome company. It's just a great company to look into. It's a great company to own. So with that, Leggett & Platt, ticker symbol LEG. So they're currently selling at $44.60. They have a dividend yield of $3.59. They have an annual payout of $1.60. And their payout ratio is 63.3%. So again, you get that higher than 3% yield. It's just under 4%, but they have a 63% payout, which is perfectly in line with what you're looking for. They have a safety score of 90, so it's not quite the 99, but they're in the 90s. So that's, again, you're what, a few points under perfect. And they have consecutive dividend growth of 34 years. So when I did some research on this company, they're one of the only companies in that field that develop metals and type of metal brackets and material and stuff like that, where they've got the financing and they've got the equipment and they've got the tools where they don't really have a top competitor in today's market at this point. Leggett & Platt is based out of Carthage, Missouri. It is a diversified manufacturer and a member of the S&P 500 index that designs and produces various engineering components and products that can be found in most homes and automobiles. Their firm was founded in 1883. It consists of 15 business units, 23,000 employee partners, and 155 manufacturing facilities located in 18 countries. So I basically just kind of read that off of the website. Again, the company, I own them. I bought them at the dip. I'm up over 50% with this company. Like I said, I just absolutely love this company. They're 137 years old. You know, they do a lot with beds and furniture inside the office space, inside homes, stuff like that. So again, if you're looking for a company to start investing in for dividend purposes, and you don't want to monitor that company on a daily basis and watch them every single day with what the company's doing, again, I think these 7 companies would be the ones you purchase, and you just collect the dividends. You can reinvest it or use it to pay bills, whatever the case is. So the only concern I had with this video, four of the 7 companies were selling for over $100. And I know that some people, if you're first starting out, you kind of have a budget. Also, if you're first starting out with Robinhood, you don't have the fractional shares. So you may be wanting to buy one of these companies, but you're looking at, let me buy, some lesser expensive companies, but you're missing out on some of these better companies. So I think one of my next videos is going to be, it's going to be like the top dividend companies, but under $100. Obviously, you've got 3 of them here, so I'll see if I can't come up with a couple other ones. Obviously, when I sat down and evaluated 40 companies, a lot of them were selling for under $100. A lot of them just barely missed the cut. I mean, the cut line was probably between, give or take, the number 1 to number 7. They were all just extremely tight. From number 8 to number probably 12, again, was extremely tight. Really good companies out there to look at. So with that said, hopefully everybody's staying safe, everybody's doing well. So I will see you on the next video. Thank you. Have a good night.